Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremat, and along with me, Mobina Kapasi. With that being said, let's get a move on and get you the headlines for this morning, beginning with we're currently experiencing a market sell-off. And this, if you compare to the US sell-off, is quite decent. I'd say the weak global cues are definitely dragging Nifty lower, but the Dow cracked 600 points, the Nasdaq was down around 4%. So given all the macro and not to speak of commodities as well, I'd say our markets are faring pretty okay this morning, Mobina.
Oh yeah, that they are. But you spoke about commodities, and that's really the other big headline after relatively quiet 3 odd months. Today, crude is down. In fact, we've shot sharp below the $40 per barrel mark for the Brent for the first time in many months. This on the back of weak global cues, demand being a bit suppressed, construction activity as well being constrained, and of course, not to mention Saudi Arabia's price cut.
Right, and whether sell-off or no sell-off, there is a lot of interest in Reliance Retail, and the list just keeps on growing. It seems that Silver Lake is the latest now to invest 7,500 crores in Reliance Retail, according to agencies. We're yet to get the closing statements, so but agencies indicate that it is very much on the cards.
All right, well, moving on, Astrazeneca, some not so good news coming in the progress of developing a vaccine. The company has unfortunately had to put its COVID-19 vaccine trials on hold as a person participating in the clinical trial has fallen ill as a side effect of taking the vaccine.
Right, Mobina, and who would have thought, speaking of companies that have grown to be the most valuable in the index or in the market, Tata Consumer is now the third most valued company in the Tata Group after a 75% rally this year. Who would have thought that dal and salts, albeit branded, could fetch these kind of valuations? But investors seem terribly excited about this one.
Okay, well, there you have it. Those are all the big stories we're tracking for you all day on ET. Now, quick look at the markets. And yes, like Varun said, firstly, our handover itself was a little weakish. I mean, we had a crack coming in across the equity and the commodity market. So comparatively, we are not faring that bad. Yes, we are below the 11,300 mark as we see a crack of around 0.6% come by, 71 points gone for the Nifty 50, and the Sensex is losing roughly about 250 points. And apart from the energy space, which I guess is seeing some bit of momentum, I guess, on account of, maybe a Reliance Industries, maybe a couple of OMCs. Otherwise, all sectors are losing, led by the banking space, which is down 2% at 25,300. Today's top losers list as well, some names from the banking and financial space. So SBI is one name, the top loser today. Bajaj Finserv is down 3%. And then you have some of the utility names like ONGC and Coal India as well that are finding themselves at the bottom, of the list in terms of the Nifty 50 movers. Tata Motors too losing 2.5%. But you have a few, gainers, but the quantum of gains as well as the number of gainers are fairly limited. So Asian Paints, Hero Moto and HDFC Life all gaining only about 1%. Nestle and Reliance as well clocking in some minor gains. Well, on that note, let's introduce our guest for today. We have with us on the technicals, as we usually do, Kunal Bothra. And today on the fundamentals, we have with us Gaurang Shah, Georgie's Financial Services. Morning, gentlemen. Kunal, over to you then. Still the series of profit booking being witnessed in the markets, according to you?
I believe that this is now getting into a range or a zone where we are now taking cues from what's happening across the globe, and that's going to have some short-term ramifications on the indices. So I think as now the global trends shape up, and especially what happens in the U.S. markets, I think we are bound to have a larger impact, and the direction could be guided on how the global markets pan out. You have to then look at two key indicators or two key parameters. One is the market internals. Now that's predominantly the first and most important parameter. Now, in the last 2 days, Monday, shift in the pattern for the market behavior or market internals, because the defensives right from Monday onwards, the market started to latch on to defensive names, and especially the IT names, You have the couple of FMCG stocks also managing to show some signs of recovery and strength, and then individual pharma names as well. So that generally indicates that the markets are migrating towards some sector rotation where there is more parking towards defensive on the anticipation that some volatility could come back into the larger benchmark indices. And the second part to look at is that the Nifty and many of the stocks in the last 2 weeks, I think from last week's sell off on Bank Nifty from the 25,000 mark, many of the stocks other than the banking stocks as well have corrected more than 20%, 10 to 20%, depending on the way these stocks have risen in the last 5-6 months. So the stock wise correction is largely I would say largely getting into an oversold kind of a territory. The indices are fluctuating 4-5% odd from their previous swing high. So I would sense that could be an indication that the index could remain more or less in this 11,300 range, and you might have those stock specific recoveries like what you're seeing in the metal stocks today. There is a decent recovery from their intraday lows. So I would sense that many of these stocks are going through their short-term reversals. It's not a major reversal as such on the chart patterns which I can see on the broader outlook for stocks as well as indices.
Okay, Gaurang, hi. What's catching your eye in the market this morning?
Hi, Varun. Morning to all of you all. So I think after making a high of closer to 11,700, 11,800 to be more precise, we've seen the markets consolidate and correct. This may be due to various reasons. First one is, of course, the unfortunate misadventure on the northeast border with China. Then you have the new regulation is placed with respect to pledge, repledge, BTST, STBT and margin requirement. Along with that, you have weak global markets. So you definitely have concerns on the market, but these we believe is short to medium term. This is a great market, and corrections like this should always be looked at buying opportunity into quality stocks with earning visibility. And my sense is that possibly we may see this subdued reaction on the market maybe throughout the day, maybe second half. By the time we wind up the trade, we could recoup the lost ground, and maybe there could be a positivity as we enter into the trade tomorrow and the next week. So having said that, we are not really looking at huge correction, and buying opportunity, like I mentioned, should be looked at. So we have two investment ideas, Varun, from a long-term point of view. With this unlocking process, we believe one should look at company like Apex Frozen Food, though the numbers were not really as per our expectation given the backdrop of event. But as we move into the unlocking zone, long-term point of view, Apex Foods should be targeting 340. These are fundamental ideas, so you need to have long-term time horizon. And the next one presently is a company from the paint sector, Berger Paints. And this stock has actually, in this backdrop of events which have unfolded, had made 52-week high or closer to 52-week high. And paint industry is something where you look at the verbatim, here into the verbatim of the paint company management. They are extremely upbeat about the demand from semi-urban and rural India. And along with that, you have recovery in the real estate sector with the steps the government is taking at center and state level. So our sense is that Berger Paint is a stock that you should look at from a long-term point of view. 640 is the target, and the big positive, Varun, for paint sector is the lower crude oil prices, and they keep their margin intact. So these are the two investment ideas, but this market, I believe, is a buy on dip market.
Okay, thanks for that, Gaurang. So I think we were supposed to classify your ideas as high risk and low risk. So I think Berger would fit in more with the low risk, and then Apex Frozen Foods would be more for the high risk. But Kunal, let's come to you. What's your high risk and low risk idea for today?
You mentioned two names, and from different categories. One from the IT pack, Hexaware. Apparently, as I was mentioning earlier, that many of the IT stocks are now showing signs of strength. Whether it's defensive parking which is happening into these names, or whether that's a new trend in the making. But nevertheless, you give more emphasis towards the price patterns. And Hexaware seems to be one of the stock which is showing some solidity yet again on the chart pattern. So I would look to recommend a bullish call on Hexaware. Short-term targets to be kept at 440, stop loss at 405. Would categorize this as a relatively low risk trade because of the moderated to low beta nature of the stock price. But on the other hand, there is a high risk trade which I would want to give, and it's more of a contra trade. It's a buy on Jindal Steel, JSPL. Now, in the last 1 week, 1.5 week, the stock has corrected from 239 to 40 levels to almost a 180, 185, which it tested today. So it's a drop of more than 20-25% on the near-term stock price. That generally indicates that indicators come into an oversold territory. So purely a bounce, expecting a short-term bounce on JSPL, hence a high-risk trade. Buy with a target of 205 and stop loss to be kept at 185.
Right, well, there you have it. Those are some ideas coming in from Kunal as well as Gaurang. Well, we just don't give you, recommendations on the on this show, but we also get to answering all your questions and queries on stocks you own, stocks you're interested in knowing about. So let's get to that. First up, we have Mihir Kashwani from Mumbai who writes into us saying that he bought 50 shares of Yes Bank at 16 rupees per share. Now he wants to know what should he do next. Well, the fact that he bought Yes Bank at 16 rupees, I'm sure he already must be having some sort of strategy in mind. But nevertheless, now he wants your opinion. So Gaurang, Yes Bank, what's the prospects over there? I mean, now that we have a new management in place, do you think that sort of maybe improves the fundamentals of Yes Bank in any way, or sort of does make it a good investment bet in any way?
Thank God he's got just 50 number of shares, and that too at 16 rupees. The second one is, what should be the next move? Well, the next move, according to me, should be exiting the stock ASAP, that is as soon as possible. I agree with you that there is a new management in place and there is a little bit of clarity, but the road to recovery looks to be very long, and that road to recovery is going to face a lot of hurdles in terms of speed breakers. And this is an overcrowded space, Yes Bank. I think anybody and everybody has got into this bank, most of them looking at purely the price of the stock, not understanding what are the headwinds that lies ahead. So in our view, my advice is that the next move should be exit as soon as possible. And if you do want to look at some of the smaller private sector banks, then we have two long-term investment ideas. First one is Federal Bank and the next one is IDFC First Bank. This should be a better place to be.
Okay, thanks for that, Gaurang. Kunal, obviously Gaurang's looking at it fundamentally and Yes Bank is not the best place. But on the chart, do you see a possible up move here or not likely?
To take away on charts, frankly, Varun, because it's not something that the stock had shown some exemplary returns in the short term and now it's going through a corrective phase. It's been largely in this band, 12, 11.5 or 12, I think was the support, where you saw some recovery coming into Yes Bank, and I think 16 or 17 plus levels is where you saw some resistance coming by into the stock price. So it's a stock which is largely into this band of 12 to 16, 17 odd. But I would also agree that I think it's much more better to try and invest your money into large cap private sector banks. At least I would be of the view that I think that's where if the banking index or the bank Nifty has to recover and rally over the medium to long term, then I believe that the large cap ones will tend to give you not just solidity, but there could also be a degree of outperformance, at least in the first stage of the recovery and the rally whenever it happens for the banking index. And I think that's more added degree of safety and cushion. There is visibility, of course, there into these kind of solid names. So you can probably look at Icici Bank, even a Kotak Bank or HDFC Bank, purely from a long-term view. So rather than just about looking at the denomination and the fact that the stock is available, which was historically at 400 rupees, dynamics have changed, things have changed for the stock. And I think if it's purely an investment play, then I would suggest a buy on large cap private sector banks, the ones which I mentioned.
Okay, so apologies to all our Yes Bank enthusiasts, but both our experts concur that for now it's best to avoid. There's much better quality banks you can be looking at if you are interested in the space. But keeping it with financials, Gauri Shinde of Coimbatore has written to us, and he bought SBI Card during the IPO, so he has made a fair bit of money. Now he'd like to know if he should add or exit his holdings. So Kunal, let's pull up the chart again for SBI Card. What do you think? A lot of people are very upbeat on this stock.
Stock has been doing exceptionally well as well. Varun, look at the last 6 months of price recovery. So I think post-listing, if I'm not wrong, the stock had gone to 700-ish. It had corrected to 500, 510 levels where there were a lot of, there was a lot of circumspect, there was a lot of, yes and no, and rather more of no into the stock price patterns. And we saw some, quite some selling off, which happened at those levels. But then from 500 approximately to 800, 840, which it tested, I think last month, it's been a phenomenal trend for SBI Cards, and that indicates that I think there's been a fresh wave of buying which has happened to this name. And I for one believe that such kind of a ferocious buying, which takes the stock back to about its IPO price, as well as seeing strong demand on volumes, etc. It looks quite strong. Now, since the price history is very limited, I may not be able to project it from a very, very long-term view or give you a view on the long-term basis, but just purely on the 6 months of recovery, I believe that a new trend could be emerging for SBI Cards. If you've already bought at those IPO levels, then I believe that keep those levels of 600, 650 odd, assuming if there is any round of further correction, keep that as a level where you could look to average further. But I believe that you should hold on to it from long-term view, at least if I try and extrapolate of what's happening in the last 6-7 months for SBI Cards.
Okay, well, that's of course the view coming in on an SBI Cards. Gaurang, let's also get in your view then. Bought it during the IPO, and we had a very interesting report on how credit card usage has actually rebounded and how. Your view on how SBI Cards could fare?
First a disclosure, we had a subscribe during the IPO and we maintained the long-term positive view on SBI Cards. Point number one. Point number two, there are no peer comparison to this particular listed entity as far as our knowledge goes. Secondly, I think with the new normal and thanks to this Wuhan stroke COVID-19 virus, usage of digital mode of payment and cashless payment has gone up considerably, which has in fact added to the number of card holders for SBI Cards. Default rate is absolutely minimal or as good as zero. And in terms of growth visibility, if I have to reflect upon the earnings gone by very recently and the commentary from the management, our view is that there is a lot to be made over here. So my advice to this gentleman or investor would be that first of all, hold on to your investment. And instead of looking at any particular lower level, start nibbling into the stock and go on adding into it on dips in a very systematic manner. And I think with maybe 1.5, 2 year plus time horizon, you should be deep in the money. That means your profit should definitely be looking very, very strong and handsome.
Okay, great. So both the experts seem quite upbeat on an SBI Card, whether you want to look at the fundamentals or the chart. Switching gears now, Subhash Desai has written to us, please recommend a stock to invest in the telecom space. So Kunal, Vodafone seems kind of, a dangerous one right now. Airtel seems to be struggling. Where would you advise him to look? Where in telecom should he look? Should he just be safe and buy Reliance? I mean, according to you, what's the play here?
It's better that you try and segregate it towards the top two players, and I believe that since you have only very, very limited options in the telecom space, I think you should go with Reliance Industries as well as Bharti Airtel. So yes, Bharti Airtel has been an underperformer in the last 2-3 months, but then look at it in a manner that there's been too much of expectations for a stock like Bharti Airtel. There were too many participants because Reliance had moved up from those 1200, 1300 levels to 2000 plus levels. There was also an expectation and anticipation that Bharti Airtel could also perform a similar kind of a price show, but that did not happen, and which is why the disappointment is coming out from those short term or the slightly risk players. But I believe that these are short term adjustments which happens into the stock price. Once the sellers or once the buyers or the weaker buyers, once they're out of the stock prices, that's where the cleaner price trends generally happen. So I'm pretty optimistic on a stock like Bharti Airtel, and I think if you're looking to buy specifically the telecom space, I think it's better that you have at least a 50-50 allocation to both of these stocks, Reliance Industries as well as Bharti Airtel.
There you have it. That's the bird. Then on telecom, and yes, like Varun mentioned, many of them are in a very precarious space. But I perhaps get Subhash's points as well, because data consumption, of course, in a country like India with a nice 130 crore people and penetration as well still being pretty low comparatively, does hold a lot of promise. But then, we have all these legalities, we have this intense price competition as well. Gaurang, how would you recommend Subhash go about it, given the fact that he literally has only 3 choices?
Whether it is good or bad, we have only 3 choices, Mubina, but the third one is rather avoidable, that is Vodafone Idea. And as you all know, day before yesterday, Vodafone Idea had a new look, that is V. I don't know about the earnings, but one thing is quite sure, looking at the ad, I think the ad spend is going to go up for Vodafone Idea because it's quite a lengthy ad. Having said that, 2 top choices. First one would be Jio, that is Reliance Industries. And when you buy Reliance Industries, you're not only buying telecom, but you are buying diversified business verticals with strong earnings and great visibility in terms of where they want to take the business, as per the statement made by Chairman Mr. Mukesh Ambani. So my first preference would be Reliance because of Jio business, and along with that you have digital, you have retail, you have oil to chemicals and other businesses. Second, of course, by default is Bharti Airtel. And my sense is that, like you rightly mentioned in your statement, Mubina, that price competition, but according to our view and the statement made by most of the operators, is that their ARPUs are going to go up in the next couple of quarters. Eventually, you will see possibly 250, 300 rupees ARPUs. And if that happens, then that's going to be a great recovery for telecom business, including big players like Vodafone Idea or B.
Okay, thank you for that, Gaurang, and thank you, Kunal, as well. We've come to the end of the queries for this morning. Always great to get perspective from you both. With that being said, let's now move forward, and the BNSN stock cloud should be up on your screens fairly soon, and we have 10 new stocks that are making it in there today. Now, it's beginning with Dishman Carbogen. There's been a miss on the numbers front over there, and we're bringing that to your attention. We then have a Tata Motors, so much happening over there and for various reasons, but I'm not really going to get into that one. ICICI Prudential, because it's one of the weaker insurance data that came out of August if you compare to an HDFC Life. We'll be diving into that more as well. Then we have Fortis Healthcare. We have Reliance Industries on the back of Silver Lake, obviously looking at the retail operation. We have a Bharat Dynamics that's related to some share sale. We have Astrazeneca, which is perhaps the biggest blow to the global markets today. Their vaccine could possibly hit a halt. For now, things have been halted as there's been an adverse reaction in one of the patients. MCX, because very interesting, given that we're seeing a large sell-off after a long time, MCX reported the highest ever silver delivery yesterday, I believe. So that just goes to show that people are flocking to safe haven metals even over here in India. Then you have IRCTC in there today because the government is planning to offload a significant stake in that via OFS as well. And then India Bulls Ventures being one of the last India Bulls companies to report its numbers today. So that's a keen one to look out for as well. Back to you, Mubina.
Okay, well, those are, of course, the stocks we'll be watching out for. Well, meantime, market veteran Harsha Upadhyay shares his views on whether the US tech sell-off would impact Indian market sentiments. And yes, he says there is no one-to-one correspondence as such between the two. Listen in.
I think clearly over the last 3 to 4 months, we have seen synchronous one-way moves across global equities. India was also part of it. At these current valuations, the markets bake in a swift recovery in the economy. What we see is a couple of factors. One, I think globally also we are seeing some bit of volatility on the downside in the last couple of trading sessions. So there could be some profit booking that's happening. So liquidity could be turning a little jittery at this point of time. Same could happen in India given high valuations. And also the expectations on swift recovery of the economy, those are receding day by day. Given all this, there is not much room for the markets to really go up from these levels. Either it will be a consolidation at around current level, or in the worst case, there could be some correction.
Okay, we'll do one thing. We will take a very short break right here on the show. But when we return, don't forget, we are going to tell you about the BNSN quiz. We will also be, talking about the stocks in news this morning.
Hi, and welcome back to Buy Now, Sell Now. In a major development, and one stock that even if it's down slightly is keeping the Nifty up today is unarguably Reliance. And that's because the world's largest tech investor, SLP Silver Lake Partners, has invested in Reliance Retail, valuing the company at 4.21 lakh crore. That's the retail segment alone, and investing 7,500 crores. Let's cut across to Ajay now for more on this story.
Well, interesting transaction being announced by Reliance today that Silver Lake, the reputed global technology investor, has picked up stake in Reliance Retail. This was not a complete surprise. It was seen coming by the street. But it's a great positive because the monetization drive for retail business also has started. This transaction values Reliance Retail business at 4.91 lakh crore on a pre-money basis. If you look at the per share valuation, the transaction values the company, the retail business, at 660 rupees a share. So this is somewhere around the same price. All the brokerages on the street were estimating the business to be around 600 to 700 rupees a share as far as the sum of parts valuation is concerned for Reliance. So it has come in on some more on the same lines. But what is a big positive is that the benchmark is established now, and the street is expecting further transactions like this, a full monetization drive for the retail business as well. The beauty about Reliance's retail businesses is after Future Group, it has become very large, and it is not only brick and mortar, it's a combination, it's an omni-channel, it's got a layering of digital. 400 million consumers of Jio are target audience for their online retail. Of course, they are expanding their footprint on brick and mortar retail as well, which got a bit impacted because of COVID. But clearly a big transaction, an important one, and for Reliance shareholders, clearly establishes that monetization of retail business has also started.
All right, that's Reliance Retail for you. And it looks like after Jio, now it's the retail business where, Reliance is really closing in on. Well, meantime, some not so great news coming in for all vaccine hopefuls. AstraZeneca's COVID-19 vaccine trial has been put on hold. Let's go across to Pankaj Podar for more details on this. Pankaj?
So, when we just talk about the vaccine update, there are a total of 9 vaccines that is, being developed at this point of time. And one of the front runners, as you were pointing out, was AstraZeneca, but they have put their COVID-19 trial on hold. Why is that so? Is because one of the volunteers had got, some sort of a side effect which probably they did not anticipate to come in. So Mobina, when we talk about trials or these phases going through, so phase 3 is firstly the most important phase which this drug is going through now. In the pharma terminology, you say that once the drug passes a phase 3 phase, very limited chances that the drug would fail. So that's why it's a tough phase, and that's it's very normal for these things to happen. But just because this is a COVID vaccine, the whole world is waiting for it. People had eyes on the Oxford research that was going through, and that's why probably it comes in as a setback. But it's a normal course of business when trials happen. Overall, comes in as a negative news. The company has said that they have put in a sort of hold as far as these trials are concerned. Maybe they come back, they don't come back, we don't know. So we'll wait and watch for more comments to come in for company. But right now, there is a side effect which has happened, which is a normal routine when you talk about phase 3 trials. The most important thing always to check is what is the side effect of any vaccine, and that's what they have been doing. But there seems to be a stoppage on that because of maybe 1 or 2 volunteers showing some not that great effects.
Right, thanks for that, Pankaj. And following up from what Mobina and you just said, the trial is currently on hold, and Kiran Majumdar-Shaw reminded us early this morning that pressures on expediting drug and vaccine trials are a major risk, and that's what we're seeing right now with the AstraZeneca trial. But let's listen into what she had to say.
The pharmaceutical and the medical world has been talking about over the last few months. But I think people are anxious, people are impatient, and obviously everyone wants a vaccine. But I think this is a reminder as to why you cannot compress timelines and what are the dangers of compressing timelines. Because if you disregard such events and just continue to enroll patients, you might suddenly find larger and larger numbers having the same problem. And then that basically is not good for the vaccine. In fact, the vaccine cannot be approved when you see so many adverse events, which might not happen in the first month or the second month. You might even get it after a few months. That is why you have to wait. And that is why people are saying that you should not expect a vaccine by the end of the year because it's too short. As one of the leading figures in the pharma world said, he said you cannot compress 1 year's data into 3 months because this is about human lives. This is about the human body. And you have to wait for certain readouts.
All right. Well, moving on from pharma to auto, we have some bullish brokerage notes coming in on Tata Motors. It's something we're seeing after a very long time. Let's go across to Vinny Motiwala for that.
An upgrade coming in for Tata Motors, where we're seeing that HSBC has upgraded the stock to a buy, and they have put in a target price of around 200 per share, and that is something very interesting coming in because Tata Motors has been under pressure for a while. If you go to see the overall domestic business as well as the JLR business has been under pressure and struggling, and these are mainly company specific problems, and that is why we were seeing the stock had also been under pressure for a while. Now overall, why is HSBC upgrading the stock to a buy? Mainly they believe that they expect a reasonable reduction in the net debt of the company by FY22, and this was recently alluded to a target to clear the net debt by the chairman. He said that they will clear the net debt over the next 3 years in the 3 years period of time. So that is something very interesting coming in over there. And by this they expect that by FY23 they could free cash flows for JLR could be at around 1 billion pounds per year. So that is very interesting, and they see a significant upside over there. Now overall they believe that a leaner and focused JLR and a recovery in MH and CV segment and industry in India will create a significant value for Tata Motors, and that is something interesting, and that is why they see a very favorable scenario for divestments also, and that could add another 1 billion pounds the company. So that is why they're very bullish on the stock, and they have upgraded the stock to a buy.
All right, thanks for that, Winnie. But we at ET now have been catching up with the chart busters, none other than Dr. C.K. Narayan and Kunal Bothra, who shared their tips to pick smart stocks to power your trades. Here's a slice of that conversation.
You see, this Nifty Alpha 50 is not an index that we normally, talk about or even refer to. And when I was just looking at all the indices, I suddenly found a very, very different kind of move which was happening in the Nifty Alpha 50. Now, if you look at the chart, then to the left side, you will find that the Alpha Nifty 50, which is the line in let's say kind of magenta color, and compared to the black color which is there for the Nifty, you'll find that it was underperforming the Nifty. That's because the large caps were getting sold out in the Jan to March kind of decline. But notice how the movement has been post the March bottom. It's actually that the Nifty Alpha 50 is now very decently outperforming the Nifty itself, and that's a bit of a surprise. What is even more interesting is that the Nifty Alpha 50 is now about 12% higher than the top that it had made way back in, somewhere in January. Whereas the Nifty is still short of the 12,400 mark that we had seen during that same period. Now, the main reason for this is that the Nifty Alpha 50 is composed of a large number of large mid cap, which are like almost wannabe large caps. And in this, we are seeing some interesting statistic. Now, the top gainer in Nifty is Reliance with about 72%, and there is no other stock which is more than the Reliance. Now, if you compare it with Nifty Alpha 50, now the Nifty Alpha 50 has 8 stocks which have got triple-digit gains and 1 stock which has got a 4-digit gain. Adani Green has gone up 1150% in this year. Okay, that's an incredible 4-digit gain, and there are 8 stocks which have shown more than 100% gains. Some going up to 280, 285%. So that's like a huge outperformance in terms also of the members. Second, coming to the the total number of indices, out of the 50 stocks in that in the Alpha 50, only 4 stocks are showing negative returns as far as this year is concerned. Compared to that, the Nifty has 22 stocks which are still showing negatives. So there is really something fantastic which is happening in the Nifty Alpha 50, which most people are not looking at. Even I must confess, I was also not looking at it, and this whole data came as a bit of a revelation to me also. So I think those who track mid-caps in particular and are fond of that should now switch to tracking and benchmarking themselves to the Nifty Alpha 50, because that is the that's the main index right now for large mid-cap dominated portfolio.
Okay, so switch to benchmarking to the Nifty Alpha 50 if you follow some of the large mid caps. That's the advice coming in from Dr. Narayan. Meantime, Kunal, let's talk about Hindalco as well. That's a chart that you're tracking closely. Quite a bit of traction being witnessed within metals. What's your analysis on Chartbusters?
Well, absolutely, Avan. And in fact, many of the metal stocks have been gaining a lot of focus, a lot of attention in the last 1-2 months. And when you look at the chart patterns, Hindalco was one of the first or the leading stock which managed to show signs of bottom first, and then when the price started to rally, all the other stocks they tended to follow the move in Hindalco. So that is why understanding the chart patterns of Hindalco will probably have a a like-to-like correlation on how the entire metal stocks in the metal basket could perform. Now, if you look at the charts which I've mentioned, there is this yearly chart, and from 2018 to 2020 so far, even in this sharp recovery on Hindalco, it's come at exactly the resistance point on the major trend line. So if you can look at the trend line over there, there is, and the downward arrows, the stock has been coinciding, the trend line has been coinciding at exact reversal points for Hindalco. Now, if you're calling for a big reversal on metal names, then this trend line has to go. Then this trend line has to be broken quite convincingly. You look at the approach for the stock in last 6 months of this recovery, it's a structured pattern. So, there is a rising channel pattern for Hindalco on the daily time frame as well. So this means that this level of 200, for Hindalco 200, 205 odd could be a very, very important and a significant resistance. And the stock manages to break past it. It's not just an announcement that, a 2 years or 2.5 years of downtrend is over, but it could probably be an announcement that many of these other metal stocks could probably be in for a multi-year leg on the upside. So which is why Hindalco is, the charts for Hindalco is very, very important. Short-term supports are at 170, and apparently the stock has just bounced off from those 170 levels on an intraday basis. But long-term patterns indicate that above the 200 mark, there could be a strong bull trend, which could happen for many of these metal stocks, including Hindalco.
All right, well, the AMFI data for the month of August 2020 is out, and it is an increase in the net outflows that we are witnessing. It's come in at 14,500 crore rupees. And not just that, the net equities as well have seen, or rather equities as well as a segment within the mutual fund industry have seen a net outflow of 4,000 crore rupees. This is the second consecutive month where we are seeing outflow. Remember that the previous month as well, equity saw a net outflow of roughly about 2,480 crore rupees. So that's, of course, when it comes to the latest AMFI data. Okay, Jayesh, just wanted some clarification over there. In June, we saw positive flows from an overall basis. If I'm not mistaken, in July, however, we saw a negative outflow. We saw a negative figure. August as well, that negative figure has only ballooned. So this is, I guess, this is the first time that we're seeing 2 consecutive months of negative flows.
That's right, Mubina. The first reaction is that the number has been quite disappointing. In fact, the initial sense that I'm getting is that as we have progressed through the unlock stage, we have seen large redemptions that have come in, from the retail participants as well. This is the second straight month that we are seeing equity outflow number to the tune of about 4,000 crores, and this is of course bigger than what we saw in the previous month. Also, if you combine this with the hybrid funds outflow, then it stands in excess of 6,000 crores. But let me quickly walk you through the numbers as well. The net outflow number for the entire industry is in excess of 10,000 crores. Which is largely led by equity and debt schemes both. During the quarter end, we normally see that liquid category sees some bit of outflows with regards to the advanced tax payment as well. But this time around, there was no quarter end, and yeah, despite that, we saw an outflow from the liquid category, which is in excess of 15,000 crores. What really stands out is that the overnight funds also, they have seen an outflow of more than 10,000 crores. For the equity, various categories, what really stands out is that the multi-cap and the large cap category, both of them have witnessed more than 1,000 crores outflow for this month itself. And you have the value or contra fund, which has also seen an outflow of about 800 crores, with the mid-cap category also seeing an outflow of more than 500 crores. Across categories, we are seeing redemption pressure as well as outflow that has been creeping in. Of course, we will be keeping a close watch on the SIP number as well, which will be declared in some time over the AMFI press call that they actually hold after an hour or so, post this release. The AUM picture, that looks fairly okay, because the total AUM has ballooned to about 27.8 lakh crores, which is 2% higher than the previous month. And the equity AUM also has seen a month-on-month increase of 5% to nearly 7.7 lakh crores. So that's overall what we are picking up from the AMFI release. Overall, looks like a disappointing set.
It's obviously a bit disappointing because we have the net outflow figure that has now come in at 14,553 crore. I think the other big figures we'll be watching out for is category-wise. Where is it that we are seeing maximum redemptions? What's the SIP number as well, which remember had slipped to below 8,000 crores in the previous month. So these would be the two other figures to watch out for. And yes, like Jayesh mentioned, it's, I guess, the retail investors that are sort of punching in their redemptions. And yeah, let's also not forget that on the other hand, we are seeing a surge in retail activity in trading. So unsure if this is a phenomena where we are witnessing where people are moving away from mutual funds, going into direct share investing. For now, we will take a very short break right here on the show.
Hi, and welcome back to Buy Now, Sell Now. We're still talking about the AMFI data, and we're now joined by Sunil Subramaniam to take that topic further. Hi, sir. Good afternoon. Thank you for taking out the time to chat with us. Is this kind of what you expected in terms of net inflow and outflow? How good or bad is it? And what's your read on the overall situation?
Couple of things here. I haven't got a detailed breakout yet of the within the equity breakup and the SIP number yet. But what I'm seeing and the trend line is that I think the inflows into the industry, in equities also, I think are fairly stable. The issue is with people who are existing investors, their redemptions have gone up. And that's perfectly understandable because you see the trend line that's been going up because as the lockdown and this, people feel the need for cash, one. Second is the existing investors who entered over the last 3 to 4 years, after the March shock, when you saw a big erosion in their NAV, this bounce back is getting their NAV back to par level. There is a relief rally profit booking. And the third is that the views on the economy, right? It's GDP down 23%. So retail investors to understand the implications, he obviously feels that there is some warning signals because of the COVID crisis and the lockdown that has caused the economy. So probably wait and watch, keep my money in liquid assets, cash, savings accounts for the time being, and re-enter the market at the appropriate time. So that's the way I read it. So it's more of a redemption spike rather than a fresh investors coming into the industry in terms of mutual fund gross inflow. I would say in equities, it should be, in my view, stable. You have a look at that. If you have that number, maybe you can look at it, but that will be my sense of it. Month-on-month gross inflows should have been stable because that's what we are seeing at our counter.
Hi, Mr. Subramaniam. This is Mubina as well joining in. So I take your point that, now that we've seen a bit of a rally in the market and, people perhaps are in the need of money as well amidst this crisis, there is this bout of profit booking coming in. But at the same time, we are witnessing increased activity in the direct share market. Not sure, of course, if it's the same players that are redeeming their money and perhaps putting it into use in the retail market or in the direct share market. But how are you reading into this entire phenomenon? I mean, is it just overconfidence in one's own ability to be able to, manage the market and, manage their investments by themselves instead of,
I wouldn't say that. I think the number of new demat accounts that have been opened is indicative of fresh set of investors, the millennial crowd, which has a lot of time on its hand on a work from home situation, which doesn't have much spending avenues, who are looking at the cash and the heightened awareness of the digital capabilities and all of that is getting them to test the market. So my sense is that the fresh equity investment, direct equity investment, and if you look at the kind of brokers who are getting these kind of funds, are Zerodha, 5paisa.com, Icici Securities. So these are all where the facility to easily invest. So a mutual fund investor, I think, have a different bent of mind. So I don't think I see much of a migration of a mutual fund investor now choosing to go direct equity. A small proportion will be there, and that would be in the ETF number, because ETFs are a large cap shape of play. So if at all some mutual fund customers would have shifted, I would say that will be the portion which will reflect in the ETF play. And direct equities, I think, are more of a first time experiencing equity who are just looking at it. And a lot of recommendations from brokers saying these stocks are at 52-week low, these are at 104-week low, and the kind of action we see in the penny stocks, that's not reflective of a typical mutual fund investor. It is, I think, more people who are seeing an opportunity and doing it. It's more opportunistic, fresh, first-time people who are buying into equities market. That is my read of the situation.
Mr. Subramaniam, thank you so much for that. Well, moving on, BNSN quiz, and apologies for the delay due to the Amphi breaking, but the question that we asked you was...
All right, Bharat Khandelwal and Kunal are the winners of this today's BNSN quiz question. Just to remind you, the question we asked you, who had the highest profit CAGR over the last 10 years? From the options we gave you between Trent, Avanti Feeds, Godrej Properties, Avanti Feeds is the clear winner, followed by Trent in number 2, Aisha in number 3, and then you have Godrej Properties last in number 4. With that, I think we're also completely out of time here. Thank you so much for tuning in.